Hey everybody, it's Adam Lyle with the Cheney Group. I'm here with Sean Barnes with Fairway Mortgage. Specifically, we wanted to jump on and have a conversation a little bit about mortgages. It's a very important part of when you're going out and buying real estate is the financing portion of it. And there's been a lot of information out there around interest rates and what the current market situation is for mortgages. And so I wanted to bring Sean in here and just dialogue a little bit about some of the questions we've been getting a lot from our buyers, people who are interested in buying or in the process of buying, people that have already got pre-approvals and now they're being asked to lock rates in. And so I wanted to bring Sean in here and answer some of those questions that we're getting quite a bit.
Yeah, and thank you, Adam, for bringing me in. I've been getting probably a lot of the same questions that you've been getting, and it's, this information needs to get out. There's a lot going on in the market right now, so hopefully we can address some of these questions, kind of clear the air, and help people make really good financial decisions going forward.
Perfect. So one of the biggest questions I'm getting is, am I going to get one of these really cool 0% interest loans? So how would you answer that?
So we can answer it really short, no. But the good news is rates are really low. So I get this a lot. The Federal Reserve decreases the short-term interest rates, the Fed funds rate, right? That doesn't have a direct impact on mortgage rates. It does have a direct impact on credit cards, home equity loans, and auto loans, but doesn't necessarily affect mortgage rates. In fact, in some cases, the Fed lowers rates and mortgage rates stay the same. In some cases, the Fed lowers the Fed fund rate and mortgage rates actually go up. When they lowered rates on Sunday to 0, that allowed banks to really free up liquidity and lend and put money in the hands of the banks to lend to borrowers for those short-term rates. The Fed also said that they were going to start buying mortgage-backed securities and treasuries to the tune of $700 billion. That statement there did lower mortgage rates for the short term, but rates have been up and down and up and down and up and down over the past, probably 3 weeks or so. So real quick, 0 rates on mortgages, no, probably not in the future, probably not ever.
That would be nice.
But that would be really nice. But the rates in general are really, really strong right now still. Although there's been ebbs and flows, they're still really, really good right now. They have gone up, they've come back down, they've gone up a little bit. In general, they're lower now than they probably were 6 weeks ago. And so it's still a really, really good time to buy in terms of rates.
So what is that range that we're seeing right now
so
in terms of rate?
So know that refinance rates and purchase rates, and this is going to vary from lender to lender, okay? But refinance rates and purchase rates are going to be two different things. Our company and our branch specifically is heavily geared towards purchases and our relationships with our realtor partners and builder partners. And so we're trying to free up our pipelines to take care of the purchase loans. So our purchase rates are still in the low 3s, really, really strong. Our refinance rates for a hot minute went to low 3s really quick. Mm-hmm. Boom, we threw in a lot of loans, refinances and purchases. Those rates went up pretty quick on refinances because the industry got just completely inundated with the refinances, the industry as a whole. And so our refinance rates have come up to probably 3.5%. Today's not been a great day on the mortgage side. So they're probably hovering 3.5%, 3.625, something like that on a really, really strong borrower. But the purchase money is still in the low 3s.
And so just to make sure that we reference the date, this is the 18th of March. So this video is probably going to be sitting out there, and who knows when you're going to be watching it. So just know what we're talking about is specific to kind of this time frame, and today being the 18th of March. So another question that I'm getting from some of my buyers, especially ones that have already gone through the pre-approval process, probably have a contract on a house right now, is I'm being asked to lock my rate, but it seems higher than what I'm seeing in the news or when I'm talking to friends or what I think it should be. Why is that?
So I think the public in general feels like rates are really, really low right now, and they are, right? But we've seen rates tick up just a little bit. So, the news has been treasuries, which is what's really tied to mortgage rates, the yields have been dropping really, really low. Well, what happened is the yield did drop really low, but mortgage rates kind of stopped in the low 3% range. Typically, they're a lot closer to where the treasury is, but I think the capacity with banks has held mortgage rates up a little bit. So the spread is almost 1%. It's a lot. There's a lot higher spread right now than what there probably should be or typically is. The other thing that's going on in the market is, a lot of times competition in our world is really, really, there's a lot of it. It's tough, right?
Mm-hmm.
And we have to be very competitive on the rate side of things. More now than ever, there's a huge discrepancy from bank to bank to bank. There's some big banks out there that are pushing rates on their website at 4.5%, which is extremely high. And really what's going on there is you're seeing those banks really trying to stop the flow of business because they can't keep up. And now with people working at home, it becomes tougher with kiddos and whatnot. And so there's just a strain on a lot of on the servicing side, getting those loans done, processing, underwriting. And so I think that's why you're seeing that big discrepancy. All this to be said, Adam, I think that the market is still strong. The housing market is still strong. This will be a blip. We'll get through this over a period of time. In the long term, it'll be a short period of time. And rates will stay really, really strong, I think, throughout this year. Maybe south of 4% for the remaining of the year. And so I think that's a really, really good sign for buyers out there right now.
Yeah, and that's a good outlook for what the mortgages look like, not just in the near term right now when it seems like we're in total chaos, but kind of as we move past this and normalize some, in the near to near future, as in probably the next 6 months or so. But that's really good outlook.
Yeah, and just to add one more thing to that, I think certain banks have different business models. Certain banks are really, really heavy in the refinance world. Mm-hmm. That's all they do is churn through their portfolios, refinancing to help borrowers save money on their rate, right? Other banks are positioned to do strictly purchase money, and that's kind of where we sit. And so a lot of those, my caution to buyers out there right now and realtors, if you have a pre-approval from a bank that's very heavily on the refinance side, strongly consider that when you're looking to submit a pre-approval to a seller, because those banks are having a hard time closing loans in 60 days. And so, I really think you have to be mindful of the bank that you're working with and their book of business and how, really what they're after. That's good for us because we've always kind of been that purchase driven. 90% of our business is purchase money. And so that really positions us strong for our buyers that are making offers, and it helps you guys win those deals.
That's great. So one thing that, and this isn't necessarily specific to this time period and mortgages right now, but just in general, when somebody's looking to purchase a house, what comes first, the lender or the realtor?
So, it's a great question. We would love for the buyers to call us first, and we can, send them your way. As a buyer, I think of it, as my own loan, right? I have a budget that I have to stick to, and I want to know that if I go out there and look at houses with you, what does this house cost me? How much money am I going to need? What's my payment going to look like? How do I put that in my budget? Mm-hmm. And so I think it's really important to have a conversation with your agent, but you have to talk to a mortgage lender. It's very, very important to get pre-approved before you go spend, if any time at all, very much time. Because for a couple of reasons, right? One, you could go look at all these houses and then find out that's not in my budget, or I don't have enough money for down payment on that house. And so I think it's a really good idea to have a really good coaching call with your loan officer and saying, hey, let's sit down and look at what your goals are, what your budget is, and let's figure out really where I need to be in the market. That helps you narrow down their search. When they come to you and say, hey, I talked to Sean, here's kind of my parameters where I want to be, that helps you narrow it down. Without that information, you could have buyers saying, well, I want to look at a $300,000 house all the way up to $600,000 because they don't know. The second thing is as a buyer, the market's still really good. Rates are still really low. There's still competition out there. And the last thing you want to do is find the house that you want to buy, you fell in love with, and not be able to submit an offer, right? Because you have 5 other people that are there, and then you have to go back and get pre-approved and go through that process. That takes you time. So I do think it's important to have a conversation with your agent. Your agent's going to refer you over to me. We're going to have a conversation so that we can put you out in the marketplace, knowing exactly what you can afford and where you need to be.
Yeah, and you said something about down payment. I think a lot of people believe that you have to have a 20% down payment to get the absolute best rates or the best structure of a loan. Is that true?
It's a complicated question, but in short, no, it's not true. There's cases where a buyer could put down 15% and get a marginally better rate than if they were to have put down 20%. And there's a lot going on there. I mean, it's a conversation we really have to get into on a personal level.
Right.
But that comes down to the loan officer really doing a good job of coaching the customer and walking them through the differences. There's a lot of times where I talk to buyers and they say, well, my mom said I had to put 20% down to get the best loan. That's just all I've been told by my family.
Right.
I started walking through this and I'm like, man, if you put down 20%, you have nothing left over, right? So it's a great idea to put down 20%, but if you liquidate all of your savings to do that, then maybe let's take a look at putting 10% down or 15% down and see how that impacts your payment. Maybe it doesn't have that big of an impact on your payment, and you can keep this other lump sum of money in your bank account, right? And then in some of those cases, it's marginally cheaper in rate to not put down that additional 10% or 5% to get to 20%. And sometimes the way I kind of explain it is, if you don't put down 20%, right, you're paying PMI. Everybody knows that, and PMI could be considered a dirty word, and nobody likes to pay PMI. However, that PMI that you pay, there's multiple ways to pay that, and so we can show you ways to kind of do it in a lump sum or do it monthly, whichever makes the most sense. But that PMI, it removes a layer of risk from you, which can allow you to get that little bit of a lower rate. And so if you can keep money on hand, still be comfortable with your payment, get a little bit of a better rate, it's a win-win in many cases.
Yeah, that's really good advice.
Yeah.
So, well, thank you so much for coming in. I know that was a lot of information, and mortgages can sometimes be somewhat complicated. So I hope we answered a few questions, especially some of the questions that we're getting right now, as there's some chaos and a lot of news being thrown out on media, social media, as you're talking to friends, hopefully social distancing some. But anyway, we just wanted to get this information out there. If you have any questions, please feel free to reach out to Sean. I'm gonna make sure that he's tagged in this video, so his contact information will be there. My information will be out there. But real quick, what's your phone number if somebody wanted to give you a call and ask a question?
Yeah, so give me a call on my cell phone, 214-929-4258. You can go to my website as well. It's loansbysean.com. So loans, L-O-A-N-S, by B-Y, Sean, S-E-A-N.com, loansbysean.com. All my contact information's on there. If you feel like you want to fill out an application, please do so, and then we'll get you in contact with Adam after the case if we get you pre-approved.
Yeah, and if you have real estate questions, you can reach me 469-213-0694 or Adam@CheneyGroup.com. Thanks so much.
Thanks, guys.